And we are back with our Tuesdays Learn from the Pro. And who I got over here today? Who else than the one, the only one, Peter Karlin. Go Roscoe. Thank you for coming, brother.
Thank you, John.
Guys, so you better buckle up because we are doing freestyle. There is no structure, so I hope you get your questions ready. We certainly, with the team, got questions over here. Let's go.
Yes. All right, I want to start off with a little thing that I did, a little story that I did on Friday. I took off from work Friday. Super cool. I took off.
Oh my God.
Shh, don't tell anybody. I went down. First, I hung out with a friend of mine from childhood. This guy was probably one of my first friends from like 5 years old or something, or 5, 6 years old. And we went to a place. Look it up on the internet. Super cool. Supercharged Entertainment. Have any of you heard of this place? Supercharged Entertainment, Edison, New Jersey. So how this all transpired is we said, well, we got to get together. We got to do something fun. My man, Emil Lafont, and his son, who's training to be, I think he's set. How old is he? How old's Andre? I think Andre's about, 18, maybe 20 years old. He is on his way to being a professional car racer. Professional car racer. How cool is that?
Yeah.
So we went to it was the best indoor go-kart, electric go-kart racing track. Would blow you if you like go-karts and cars and racing. Super cool. These different level than you've ever played that before. Forget about the bumper cars in a carnival or this or that. This thing was this huge indoor track with helmets. You had to wear a helmet. These little go-karts go, 40. Does it go 50? I don't know if they go 50. They at least probably, I think they were super duper fast. Super fast and super fun. So that was my Friday afternoon. It was really cool. Really, really cool. Supercharged Entertainment. And they have a lot of other things too. They had games and video. No, not Long Island. It's not Long Island.
It's in Jersey.
It's
I
New
went
Jersey.
there.
You did go there.
Supercharged. Yes.
Did you go in the cars?
I did the bumper car. Are you
It's not bumper.
No, it's the kart racing.
Go
kart.
Yeah.
Where you're going around.
Yeah.
Yes.
Oh, you did. Okay.
Go karting.
Okay, cool.
Oh, we got three viewers over here. Let's see if we got any comments. No comments so far. So if you are live, give us number 1 so we know you are still there. And if you have comments or questions for us,
And if you want to know about Supercharged Entertainment, ask me as well.
exactly. Yeah. we got it all, guys.
All right. So today, I have a few things to talk to you guys about. I'm going to talk about this. I'm going to talk about relationships, right? And relationships in life are super important, right? But especially, in your personal life and business. And if you don't have good relationships and good connections, you're going to have problems, right? And I give you an example of something that actually happened today to me. So I'm working on a file, and a condition came up. We were close to the end of the file, getting a clear to close, right? It's a bank statement loan. So we were showing bank statements were in lieu of income, right? The bank statements were being used for income instead of tax returns, right? A 1.2 was about a $1.27 million 2-family home. Two borrowers are putting down 40% investment property in Queens. Great credit. These guys, 40% down on 1.27 was the whole thing. They needed over $500,000. They were getting money from business, closing costs and everything. They were getting money from the business. They were getting money from their personal account. So towards the end of the deal, I got an email back on a condition from the underwriter that said we can only use 75% of the business assets. 75. Now I told these guys what they needed, almost not to the penny, but
for the down payment and closing
for the down payment and the closing costs. And then now it's my fault. right?
Mm.
I didn't know about this guideline. I didn't know.
And I mean, there's zillion guidelines like this in any different loans.
So many, that's the thing about what we do. I
Yeah.
mean, and in life and anything, whatever you do, whatever you're a realtor, you're a loan officer, you're a doctor, there are guidelines, there are rules. You got to know them. Got to know them. And there's so many, and they change. And they change every month.
different programs,
Different
guidelines.
updates, different things happening in the economy, things happening in the government. New discoveries, right? So anyway, I did not know about this. 75% of the business assets, right? I take 25% haircut on the business assets. I'm like, oh my God.
You can use it.
Okay, so my thing is find a solution. Find a solution. Okay, well, they're putting down 40%. I could back up to perhaps 30%, right? 35% down, something like that, 30, 35. But I said, you know what? I spoke to the account executive for the bank, for the lender. I said, help me out. What do we do? He said, here's what you do. Get in touch with the underwriter and ask for an exception. An exception.
Wow.
Oh my God. Why not? I've done it many times in my career. You ask for an exception. But you have to ask for an exception, first of all, nicely.
Mhm.
At the right time.
you
The
know,
right
you got to ask for exception
Gotta
nicely.
see how he feels. How was your weekend, Frank?
You got to ask for exception nicely, and you have to also back up your request, right? You got to say, listen, files good. These guys have been in business a long time. They got 760 credit score. They got 40% down. They're homeowners. They already own other investment properties. It's a solid deal,
You gotta prep yourself.
right? You got to prep. You got to prep yourself. You got to get ready for the discussion. So this account executive says, send an email to the underwriter. Think about it. Say, you know what? I'm going to call the underwriter. Now, you got to know that some underwriters are typically, a lot of them, they don't want to deal. Some of them, they don't want to deal with loan officers directly. They don't want to take a phone call. They're busy. They're underwriting files, right? They're in a file. They're not ready.
They're in the zone. They focus.
They're in the zone, phone call, and a loan officer. But some underwriters are super cool. Some underwriters are super cool. They'll take the call, they'll chat, and they'll help, right? I call this underwriter, Kevin, my man, I'm calling your manager. I told you I'm going to take care of that because it's amazing. I call Kevin, takes my call. He knows the file very well. And I tell him exactly what I'm telling you guys. I say, Kevin, what do we need to do to make this work and get an exception? Can we ask for an exception? Pete, send me, if you can get retirement accounts, if you can do this. He starts helping me find the solution, right? So I say, okay, let me see what I can find out. So I go back to the borrower. I find out that you can get, for an investment property, here's an interesting guideline I didn't know. An investment property, first of all, investment property, typically you can't get gifts. But in this particular deal, with this particular lender, you can get a gift, but it only can be used for reserves. What's reserves? It's having enough money left over to cover your PITI, your principal, interest, taxes, and insurance on not only the subject property, but other properties that you owe, right? Because the bank doesn't want to see that you're tapped out when you buy especially when you buy an investment property.
That's 6 months.
It's 6 months on the subject, 6 months on the subject,
The one you're buying.
the one you're buying, we call that the subject,
Okay.
and I believe it's 2 months on the other ones that you owe.
What you own.
Two
But
months
how they
reserves.
would know what you own?
Oh, they no. I had to submit when I.
If you have it on the LLCs or separate entities, like how they would know
Yeah.
what you own.
Well, because you run title. When you run title, you see what people owe. If it's under an LLC, it might not come up on title. But I mean, you're supposed to
So they will see reserves 2 months.
You also, when you run people's credit and you see mortgages on somebody's credit report, these things come up. So anyway, I speak to Kevin and he tells me go talk to the borrower and then let me know, and then and then I'll request the exception. So that was yesterday. So today, I spoke to the borrower. Oh, so the gift. So you can get gift money, but the gift money in this particular program for this particular lender would be good for the reserves only. You can't use it for anything else. So the reserves in this particular program for this loan was $42,000. So I spoke to the borrower. Could you get $42,000? Yes, easy, no problem. He could get gift money, right? Get that money into the bank account today. I think he actually was doing it today. Kevin calls me today. I get a phone call. It's Kevin. Pete, Kevin, oh my God, thanks for the call. Typically, underwriters do not reach out and call loan officers.
Unless you're special.
I don't want to say that. No, I'm not going to say that.
It's a
This,
different one every deal too, by the way. Different underwriter every deal. Or you get the same
yeah, you never know who you're going to get.
What was valuable?
You never know who you're going to. It depends on, like, a lot of banks, like we deal with. We have like UWM, United Wholesale Mortgage. We have a pod of underwriters that are dedicated to our company. It's like a pod, probably about 6 to 10 underwriters, right? Out of 1,000, they have 1,000 in that company. Now, other companies, other banks have, their group of underwriters, but and different underwriters specialize in different things. You have FHA underwriters, you have the bank statement underwriters, this and that. So I don't really know, and I'm new to the broker world, right? So I'm just sort of getting to know everybody. What'd you say?
It goes in tally, right? So the other writers, they have a certain number of
Correct.
files, and
Correct.
If this one has less, they'll do
Correct.
okay.
Correct.
They balance
Based
it
on
out
their
so they can-
their volume, their
they can
talent.
move the loans faster.
Exactly.
right?
Exactly. Or their skill set. So anyway, Kevin calls me and he says, I have great news. I said, do tell. What's the story? He said, well, because the business has kept typically, see, if you have, I told you business assets, right? But if the business assets get moved to the personal account, it's no longer a business asset, is it? It moved to the personal account, right? But you're not supposed to do that during the loan program, during the loan. You could do that. You can do that before the loan. You could do that before the loan. You can do that before the loan, but you can't do that during the loan. But Kevin went above and beyond, looked at the bank account for this particular business and saw that they had extra funds in the business. Like their funds in the account were more than their usual funds. And if they did make a move, I hope I'm not getting in trouble, by the way.
We are live, keeping it real here, guys.
But I'll get to my point in a minute. But so anyway, the move is we're gonna, and the borrower doesn't even know this yet, but we're gonna move the funds from the business account, some of the funds to the other account. There were other bank statements that came in yesterday, so we're gonna be fine. The bottom line is we're gonna be fine, and we don't even need to ask for the exception. We don't even need to ask for the exception. But this is a point. Here's my point. My point is a few things. Number one, be nice, right? Work together, create good relations with people, right? I'm all about, and this is 199% of the time, give respect to people, right? Especially if you want their help. I mean, especially if you want their help, but always, my thing is do unto others as you would want done unto yourself, and don't do unto others as you would not want done unto yourself. So anyway, Kevin gave me the solution, right? Was nice enough to call me. I'm going to actually put a call out to his manager. I told him that I was going to do that. And, we now have a loan that doesn't have to be restructured and does not need an exception, and is going to go through. So, the other thing is, sometimes you have to feel it out with underwriters, right? Sometimes they don't want to talk to the loan officer. Sometimes they are too busy. But I will tell you, it's so interesting. Like a lot of people have said to me before I got into the broker world, the mortgage brokerage world, they said, you won't have access to underwriters. right? Only in banks do you have access to underwriters.
As a broker, you won't have
As a
access.
broker, you won't have that access. You won't be able to talk to them.
I
And
think
it's
I think
so,
I think I think
it
you-
is so not that way.
I think you used to say that.
I did. I listen.
To other people, like,
You know, I mean, there are a lot of sort of
Misconceptions.
misconceptions.
Yeah,
There are a lot of
100%.
misconceptions. You know, people. I always, people told me, don't sell.
broker charge you extra fee.
Brokers charge. Well, they do. There is a broker fee,
Yeah.
but you know what? There's bank fees, and with a broker, I tell people I'm call me Mr. Costco. Do you like the wholesale? Do you like wholesale pricing, or do you want to pay retail? Because brokerages can get you wholesale pricing, right? And everybody wants a great deal. Everybody, rate, what's my rate? What's my rate? Right? It's rate. They want to know. That's the first question I get every day, multiple times a day. Anyway, that's my story with that. Any questions about anything?
Yeah, I just want to touch on the knowledge of knowing the little guidelines, right? And also every bank might have a certain guidelines.
Every
which-
bank, every loan program.
every loan program, right? For example,
And then we also have,
this loan, right? This loan which we had with Kenny, right? We had a deal with Kenny, which you're aware of, right? One banker said, "Hey, for the VA, we gotta have a seasoning for 2 years, and the loan has to be delayed till September." There was a bank A, right?
and listen, I don't,
But your bank was like, "No, we okay. We don't need
Yeah.
to wait 2 years, right?"
Yeah.
And it wasn't a VA guideline. And the banker was like, "You know what? This is a VA guideline. Any bank you go to, it's the same
If
thing."
was that, the lawyer communicate with the other
Wow.
agent.
wow. And sometimes not we, because I'm not a lender anymore, but lenders have what they call overlays, right? So they have, there's Fannie Mae and Freddie Mac guidelines, and then there's overlay, right? There's here's what I'm putting on top of that. Here's the extra that I'm putting on top of that. So, ideally you want to work with people that don't have a lot of overlays and or know the overlays, so you know how to work with them. You know how to work.
Over like an extra rule.
An extra rule.
Yeah.
It's an extra rule that the bank
Requirement.
chooses to have, right? They say, yeah, I know the government, I know Fannie and Freddie say this, but I'm adding to that, right? For our own protection, right? And by the way, speaking of protection, things will get tighter. Things will get tighter in the lending world. And I'm not just saying mortgages. I've been reading about this. You guys have heard banks collapsing and this and stuff like that. It's going to get a little tighter in borrowing money. It'll get a little tighter in borrowing money.
A little tougher.
A little tougher because of what's going on in the in the world and the economy today. But
Tougher
that-
in what way?
tougher, just more I think
Harder
right,
to
more
qualify.
conservative in the qualifications, I think.
Okay.
More requirements.
Yeah.
Right?
Yeah.
More strict requirements on people, which might not be a bad thing,
No.
right?
No, I mean, right. So what happened after the collapse 2008, right? We had all these restrictions came in, right? And because they didn't want mortgage loan officers talking to appraisers, they didn't want, a lot of things changed. But because it was craziness. It was sort of the Wild West, right? Which is why we had a collapse. So now, things loosened up over time, loosened up. And now we have banks failing, banks having issues right now. So now things will get tight again, right? And a little bit, I think, because the rules and the regulations, I think, have stabilized us for a while. I don't think we're going to see, right, John? We're not going to see a meltdown in real estate anytime soon.
It's something interesting I watched yesterday, right? Joe Rogan, he has the podcast.
Mhm.
And so they were discussing about how one of the big banks collapsed, right? And basically they were saying if a lot of people, I don't know exactly what percentage it was, I think it was 24% of the people that would go to the bank to withdraw their money, all the banks would collapse.
Yes.
If 24% of all the people went to, I got you.
And we
I got you.
try
All
to
the banks,
withdraw
yeah.
the money out,
Gotcha.
all the banks would collapse.
Wow.
Right? Because they have no money.
Right.
Right? So what do you think about the rates? So I know a lot of bankers end of last year and beginning of this year, they were predicting, right, that the rate's gonna go up, but they're gonna come back down end of this year. How do you feel about that? Is it still seem like that still might happen? Or are you seeing things differently now?
You know, that's right. You're asking my opinion. So
It's just an opinion, by the way.
It's just an
guys,
opinion.
Okay? Nobody knows the facts over here. Just God.
I think within the next 12 months, we will see a downturn. I think within the next 12 months. That's what I think.
You think the rates will go down within 12?
Within 12. Yeah.
Okay.
Yeah. Yeah. I think they'll go down within 12. And listen, just, over the last few weeks, there's been a nice downturn, right? I mean,
the raise,
right? Monica, we just spoke about, listen, 5.1%.
Yeah.
We just got her client.
No points.
No, there's points.
There's
There's
how
points,
many
but that's, I gotta look. I think it's somewhere between 1.5 and 2.
But still, five something. That's not
But that includes broker. That's the buy down. That's the broker fee. That's
What do
everything.
you mean points?
Points is a percentage of the loan. So if it's like $100,000 loan, 1 point is equivalent to 1%.
Correct. One
Right.
point equals 1% of the loan amount,
Oh,
and on 100,000, 1% would be
Dollars? Thousand?
1,000.
no,
Would be 1,000. So here's how it works in the mortgage business, right? So like John said, well, there are points associated with that rate. So typically, frequently, you'll have, so the rate is X, and how many points did you pay to get that rate? I paid 2 points. What does that mean? 2% of the loan amount. What's the loan amount? 500,000. What's 2% of 500,000? 10,000. So $10,000 the person paid to get that rate. That 10,000 is part of the closing costs. Part of the closing costs. Okay. And the rule of thumb in the mortgage industry is pay 1 point to lower the rate by a quarter. Pay 1, rate goes down by a quarter. That's the rule of thumb. It's not always that way, but it's typically that way.
What about, like you said, every program has different rules and guidelines, and every bank has different rules and guidelines. Like, how do you keep up with that, and how can you find those guidelines? Do you guys have publications?
No,
Or
we
is
have,
it
yeah, we have.
online? You can
yeah.
search for it. Like,
Well,
you have a whole library in your bank. Like, how do you keep yourself up to date?
so when our company works with about 30 to 40 lenders. So if someone comes to me with a plain vanilla, conventional FHA, VA, whatever, right? We have a computer system where we put that information into the system, and then we hit a button and it tells us which lenders will do that loan type, right? And then when those lenders come up, I can also click on, there's also a little icon that I can click on to read the guidelines for that lender, for that program. Now, if it's a conventional loan or an FHA loan, typically, right, without the overlays, they're following certain set of guidelines set by FHA and Fannie Mae and Freddie Mac, right? So I can read all of that stuff. But each lender has their own guidelines, and you got to read. You got to read.
Like this guideline, the underwriter told you
The 75%. Yeah, man.
It was, but it's written over there. Or
It's written in the
Wow.
guidelines. It's written
And
in
how
the
many?
guidelines.
Like, is it a lot of pages? Or just a one pager?
It's normally a number of pages for each. Yeah,
Okay.
yeah.
So it's good. You can keep on reading, right? If you
There's,
to read, you can
plenty of
keep
reading
yourself-
to
keep
be
yourself busy all the
done.
time.
I mean, you know, the better, the more knowledge you have, the better you are, right?
Yeah.
So, you know, those who spend the time, you know, reading and learning are going to be the one, you know, who, the same thing for the doctor that you go to. You want to go to a doctor who know, you know.
Just a quick question. I just learned something today. When you're working with a banker and you want to ask a qualifying question, how many hours per day do you spend reading guidelines?
Yeah, well, let's move on to the next topic. No, I'm kidding. No, I don't. I mean, the truth be told, I read guidelines when necessary, right? I should, and actually, that's a good point. And I also, here's the other thing. I have a lot of great resources, right? So if I don't know something, for instance, I'm going to give you an example, and this is really cool with my company. We have these non-QM, non-qualified mortgages, right? It's the the non-standard mortgage, right? If I have a loan program and I'm not sure what bank it fits with, I can send out an email to all that goes out to all of our non-QM lenders, and it goes to their account executives, and I can write down the whole scenario. I'll give them the whole scenario, and I'll say, hey guys, if this applies to you, if this sounds something like your bank can get done, let me know. Right? So I'll throw it out. I'm not going to read through every guideline of every bank when I've got someone on the phone or someone's waiting for an answer and I got to get back to them. I'll send it out to the account executives who know their programs better than anybody. And then they'll tell me, yes, this is a fit. And then I'll get in touch with them and then I'll work it out and I'll give them the nitty gritty of the loan, and then we'll figure it out if there's a fit.
Now, I just got a video actually. Are mortgages at risk? Mortgages could be in danger as banks continue to crash. This was just posted on Bigger Pockets.
Oh, that's interesting.
And I just got this video from Sana actually. So I was curious, like, and I know every market is a little different. Like,
Yeah.
we know that. But I also know because I did experience 06, 08, and I know how important the mortgages are, right? Because if the banks are not willing to give out money to people, people can buy homes,
Yeah.
right?
Yeah.
That's a fact. So, I mean, do you see from your perspective, and again, this is just from your perspective because you can't really see, everything, but from your perspective, P, do you see there's been like less applications, mortgage applications, more applications?
So check this out.
You know,
Check this out. Very interesting. I just got, before I came here, right as I was driving up, I was speaking to my rep at UWM, United Wholesale Mortgage, Max. And they, this month, closed, I believe the number is 22,000 loans. 22,000 loans. That's a lot of loans.
in 1 month.
In 1 month.
1 month? Who's
1
this?
month. 1 month.
Who is
But
this?
that's the biggest wholesaler in United
That's the biggest
States.
wholesaler in the
Yeah.
in the country.
In the
country.
Yeah.
In the country.
States.
But that number is bigger than,
What was the last year? Do you know? Did
Hold
you
on
give you
one
like the other numbers and stuff?
I don't know. Give me 1 second. I'm gonna call him right now. Yeah, live. We'll call him Max.
Live on the air with Peter Karlin.
I'm doing well, Max. You're on the air. We're live. I'm calling you live, my brother. I'm calling you live. So listen, Max. Was it 22,000 was the number that you said month? 22,000. And that number that number, is that higher than? I mean, is that high? Is that average? Is that low for you guys?
Gotta be ready to post your stuff.
So all right. So hold on a second, Max. So the 22,000 that I just told you,
Yeah.
it's a little low for them. It is a little low for them.
Okay.
Typically they do about 25,000 a month.
Okay. So
25,000
there's
a month.
about, what is it, 10, about 20% drop? 10%
But
drop?
well, also the month isn't over. I mean, it's the 28th, so it's
And what was it last year? This time?
they're projected to hit 24 by the end of the month.
I see.
Yeah.
I see.
Yeah.
But what was it last year?
What was it, Max? Do you know? Do you by any chance? And I know. I mean, do you know what your loans closed last year was? No, that's okay. Right. What? So what Max is saying, hold on a second. Let me just tell folks what you're saying. So what he's saying is they're doing about the same as last year. They're on target for the last year, but the significance is this market is not last year's market, right? We're in a tough market now, right? We're in a more challenging market now.
More expensive.
The money's more expensive. The things are more restrictive, right? It's interest rates are higher, but these guys. I mean, I also on my way here, I also asked Max. How I was curious, and one of the things about I think being in the broker world and also being connected to a company like UWM, I asked him how fast has he seen a loan close in his company? How fast has he seen a loan close?
Fastest deal.
1 day, ladies and gentlemen. 1 day.
Closed in a day? Or they got?
And hold on, Max. I'm actually going to put you on speakerphone.
That's
So Max, say hi to everybody.
What's up, Max?
Max in the building.
Right. So Max, I have you on speakerphone. So how does a loan close in 1 day? Well, I guess number one, you get an appraisal waiver, right?
Yeah.
And
that was with a waiver. If you get everything signed and you have docs prepared. So this was somebody obviously that's they're in depth with the whole process with the system. So they had everything on their lap already. But you have
right. They had the title, appraisal waiver.
Exactly.
They had what Max? What state was that?
Talking about getting. Go ahead.
You know what state that was? That loan?
No, I'm not familiar. This was last year.
It was last year.
This
Okay.
is one of my other accounts. I'm almost positive it was Florida. That was one of my bigger accounts.
Yeah.
Before I came over on Rob's team, so most likely there. But it could have been California as well.
Gotcha.
But I know they had all the docs. We got everything signed in the morning, ran Bolt, and then by the end of the day, we had that CTC. We were just waiting on our CD to cool off.
Gotcha.
CD to cool off. I love it.
Preparation is the key. That's it.
Let me now Max just mentioned something.
More times than not, if we have everything, trade's gonna be holding us up, but we can get those done pretty quick.
Max mentioned something that his company has called Bolt. It's a cool thing for you guys to know. It's for conventional loans. It's for a conventional loan where you can actually put in the information and documentation into an underwriting system, and this could be for a TBD, so you don't have the property yet, or you have the property, and it will give you an artificial intelligence underwrite on the loan within what? I mean, it's fast, right? I mean, it comes back to you quickly.
If you were to give me all the documents, I can do it in about 5-10 minutes. But walking through about 15 minutes, going through classifying their ID, their income, some liabilities, and we will have it's called a Bolt approval. It's the best origination loan tool. That's the acronym is. But the Bolt approval in minutes. And what that is a checklist of exactly what we need to close this file. Whether it's 5 conditions, whether it's 10 conditions, but this is exactly what you need. You can bring it to your borrower, realtor, really anybody who needs it to give you that certainty on, hey, we're approved, we just need an address, or we just need an LTV solidified, you know?
So it's a pre-underwrite.
So what's the difference between
Exactly.
UI and
It's an AI
Just go-
on
just go on the
Like DU? Like if I run DU?
It's,
So that's a good question. So John asked, what's the difference between like a DU approval, an LP approval, and a Bolt approval?
really nothing, because we need an AUS approval to hop in there. The AUS is just really approving their income, saying, yeah, we're eligible. The Bolt approval is saying, this is what we need to close the file. So it's a little more in depth. It goes into the actual borrower's profile and shows you what we need to prove. Like, we can have an approved eligible on every file, but what do you need to close that file, to close that mortgage, to actually get in there, get CTC? This is what it is. So it's a conditional approval.
Cool.
It's just a little more in depth. Like, you can go in and kind of decipher what you need on the AUS breakdown when you're opening up the findings. But this really, puts it in plain English. Says exactly what we need.
Cool.
So,
Hi, Max.
Max, just curious, since you mentioned AI, do you guys looking to also replace the loan officers with AI?
That will never happen. Tell him, Max.
No, we can't replace loan officers. We can't replace AEs. We can't replace brokers. That's the whole idea behind the broker channel, is you having those options. If everybody were to be AI, that'd be the big thing. That would be retail. That'd be the one rate, the one market. We don't want that. We want everybody to have those options. This is just how we can have all those deals coming across our desk. This is how we can do it more efficiently. So it's not replacing anybody. It's just giving you that upfront certainty.
Very good. Max, my brother, thank you so much for your time.
We'll never be able to replace you guys.
There you go.
Appreciate it.
All right, buddy.
We're all.
Talk to you
Hey,
soon.
If you guys need absolutely anything, Peter's got me in his pocket, and he's got my cell. So if you guys need anything,
I
you let
love
me know.
that.
Thank
I love
you.
that.
Thanks, Max.
That's good, brother. Appreciate it.
All right.
All right, brother.
No problem at all. You have a great night, Peter.
All right, buddy. You too.
Yep, later.
Bye.
That's so nice.
Yeah, he's a good man. Yeah, they good support, great support. What else? What else you got?
So I think it was good.
I
Question.
have a question. So I want to understand the beginning to end process of the loan. You know, I have a buyer, you know, we're under contract, you know, we have a buyer, we have a seller, we have a listing agent. Everybody wants to know what's the timeline. You know, how do we get from that contract to a closing? What are the steps that you need? You know, when do we get it clear to close, etc.
Okay. So the most important thing is the well, I don't want to say the most important. Do the pre-approval process up front, tight and right,
Yeah.
right? So the more we get from a client up front, all the tax returns, pay stubs, W-2s, ID, questions. How come your address is different from this tax return to this tax return, and your ID? Get a letter of explanation written out, signed. How come you had a gap in employment between this job and this job for 7 months? What happened? Get a letter of explanation, sign it. Get all this stuff up front. Then when the contract comes, right? And that's why when you know, I tell you guys, when you go out and you take somebody out and you want to put in a strong offer, because when you give that pre-approval letter, frequently I'll get a phone call, right? And I got to talk to that listing agent, because that listing agent is going to quiz me on the strength of your client. And you want me to sell your client super strong.
Yeah.
Oh man, Mullane, solid. Credit excellent, looked at the docs, went through everything. And what are they asking? They want to know, is this deal, if you're the listing agent, is this deal going to go through smoothly? Am I going to get paid? Is my seller going to get their money?
Yeah.
Did you, loan officer, do the work that you need to do? And you guys have the right to quiz the loan officer. And you should quiz the loan officer. And if you don't know how to quiz the loan officer, I'll tell you how to quiz the loan officer, right? So Loan officer did the job. Great. You accept the offer gets accepted. Now you move into contract. You do your inspection. You negotiate the contract. Buyer gets the contract, signed contract. Give the down payment check, goes to the seller's attorney. Seller calls in their client. They review it. They sign their side of the contract. Now you have an executed deal.
Right.
Obviously, you guys know if the seller doesn't sign and the buyer doesn't sign, you do not have anything. Right? Okay. So now you have an executed contract. You send that contract to the loan officer. Right? Now the loan officer's job is to get that clear to close as soon as possible. That's what you want.
So what are your steps?
I'm going to give it to you. Okay. I'm going to give it to you right now. So my steps. Now I get the contract. Now I package it up. I get disclosures out. We got to get disclosures out to your client, right? Your client has to sign that their intent is to proceed. We have a form called intent to proceed, right? You got to show them the numbers. You got to show them the estimates. You got to show them, you're getting involved in a loan that's going to, all the sort of, the nitty gritty of the government. It's about a 40 to 50 page packet, depending upon the loan. If it's an FHA loan, it comes out with it could be up to 80, 90 pages, right? And there are a lot of reading material, but what's most important to the buyer is, what are my numbers? What are my closing costs? What's my interest rate? What's my payment going to look like, right? That's what the most important thing is. So, okay, so now they get that document, they e-sign it. We do everything e-signing these days, right? Makes it really simple. Most things don't have, the old days ago, many months ago, many years ago, you had to print everything out and hand sign everything. But now you can e-sign everything, right? So now the client e-signs, has the intent to proceed. Ideally, we have all the documents, right? I also we get either a credit card or we have the borrower pay for the appraisal, right? They got to pay for the appraisal. As I mentioned to you earlier today, when the appraisal gets paid for, it's not going to the bank. It's not going to the lender. It's not going to the broker. It's going to the appraisal management company. That's the person, that's the entity that pays the appraisers. Yeah. Appraisers are independent contractors. They are not employees for the AMC, appraisal management company, right? So you have independent contractors working for the appraisal company. The borrower pays the appraisal company, and the appraisal company pays the appraiser. Now the appraiser goes out and does the appraisal. At the same time, the first thing happens is the appraiser calls the listing agent. Go ahead.
You order it before it's paid?
No. You got to pay first.
You got to pay first.
Yeah. And here's why. Because what if you don't pay? Hey, I don't feel like paying. What if you don't go through with the deal? Oh, I don't go through with the deal. I know you ordered the appraisal. I'm not paying.
So I'm going to be part of the closing costs right at the end.
Some banks do that. Some banks do that. But a lot of banks these days don't do that.
But also the appraisal is coming from a completely separate company.
Right. That's the AMC. That's right. The appraisers
like home inspection, right? You do home inspection, you pay the home inspection, you done the inspection, boom, you pay.
Right.
Sometimes appraisal comes into your closing costs at the end, though.
Sometimes it does, but
because the bank pays it and they
get reimbursed.
Then they reimburse.
But the issue is, as you've seen and you've witnessed and you understand, deal doesn't go through. Buyer says, I'm paying. Thank you.
Yeah.
And now the bank is on the hook for that appraisal, right? You wouldn't want to be on the hook. I wouldn't want to be on the hook.
Okay.
So that's why we take the payment up front. We're not ordering the appraisal until it gets paid.
Okay.
Right? So appraisal gets ordered. Once we get the contract and the documents are now signed, the disclosures are signed by the borrower, it moves to processing. Processor then makes sure that everything looks good, that there's enough to submit to underwriting before now there's some banks that wait for the appraisal. There's some banks that wait for the appraisal to come back before they'll take your loan package and move it into underwriting for a commitment. We don't. We'll actually move that. We'll take that package and we'll move it right into underwriting right out of the gate. So get the contract, order the appraisal, processor looks at the package, make sure that everything's good. And a good processor is essential because a good processor's got to think like an underwriter, right? Do I have everything here that's going to get me a commitment? And not just a commitment. You want a commitment with as few conditions as you can possibly have, right? Because if you have few conditions, you only got to handle 2-3 conditions, and you got to clear to close, and that's what we all want. We want to get it clear to close as fast as possible.
Got it. Underwriter set gives a clear close.
So the underwriter is the decision maker for the bank.
Right.
The
Underwriter-
is the most important person
Oh, yes.
Well,
See,
it's
in a way.
they're the
Stamper.
I'd call the underwriter the judge in the courtroom,
Yeah.
right? They're the judge in the courtroom, and the loan officer, and you want to have a good one, is your attorney in the courtroom.
and what they do to be that, like a course, like how they prepare. Like,
Who, the underwriter? Oh yeah, they're trained, they're licensed. Yeah. You got to be trained.
Okay, so we've got appraisal, processor, underwriter.
Disclosures, underwriter.
Now,
Oh, you took people. Yeah.
how do we get the clear to close from the underwriter? Underwriter brings it back to the processor.
So right. So it goes
so the price-
goes to the underwriter.
Appraisal's in the beginning.
Goes to the underwriter, like our deal we're doing right here.
Yeah.
Goes to the underwriter. Underwriter comes back with a commitment.
Right.
Okay. Now we got the commitment, but the commitment is contingent upon a number of things. And I told you before, commitment is also known as a conditional approval, right? Conditional approval is the same thing as synonymous with commitment.
Conditional approval, loan commitment is the same thing.
Same thing.
And it comes after the underwriter has viewed the contract.
That is correct.
Okay.
Now it comes back. Commitment comes back. Ideally, you want to have what we call 2 touches. 2 touches. Touch number 1 from the underwriter.
Before the
Touch.
touchdown, right? 2
Yes.
touches before the touchdown.
No. Yeah, actually,
Two
correct.
passes
Correct.
and
No,
touchdown.
correct. 2 touches. The first touch by the underwriter, commitment. Second touch by the underwriter, you want clear to close,
Got it.
right?
Got it.
And I tell people clear to close, I always use this analogy, John knows, I've done it for many years, is like a plane being clear for takeoff, right? Plane pilot goes to the control tower. Hey, I checked all these systems, blah, 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 blah. Can I take off? Yes. Control tower says you're good to go. You're clear for takeoff.
When does title come in?
Title should come in during, well, it depends when the buyer's attorney orders title.
Yeah, some attorneys
The
orders like
buyers-
right away. Some attorneys they wait for the appraisal to come in first.
Some wait for the commitment to
Some
come
wait for the
in.
commitment to come in
So the
first.
buyer's attorney orders.
It's the buyer's attorney typically 99% of the time orders title.
From a title company who
No.
they're working with.
Now, when does the seller, what does the seller's attorney do in all of this?
Sitting,
Nothing
Waiting.
The money.
hoping for the
Okay.
best.
Okay, got it. So we've got fully executed contracts, appraisal, processor, underwriter, back to the loan officer, back to underwriting
Back from commitment,
from commitment.
now that comes back to my processor,
Okay,
and my processor reviews it,
right.
right? I'll look at it too, but it's the processor's job to review
The
it.
process is like the nurse for the doctor and the rest like the doctor, basically. That's
Correct.
what it is.
So it goes.
Yeah,
Like, he
yeah.
processes the paperwork for him.
Yeah,
Just to
So-
make sure that
So processor, underwriter, processor, clear to close.
correct.
Got
No. Processor, underwriter clear to close.
it. Well,
Underwriters,
doesn't the underwriter bring it back to the processor?
no, the underwriter's
Okay.
issuing the clear to close.
But when do the conditions happen? What if there's conditions? Like I'm saying,
Commitment comes back to my processor.
like,
Now my
commit-
processor's got to interpret that,
Right,
what I showed you,
Right.
right? Processor's got to interpret the commitment
right.
and communicate to the borrower,
What is needed?
this is what you need.
Right.
Now, some processors communicate to the borrower. That's really how it should go. Some of them communicate to the loan officer and the borrower, or just the loan officer and say, hey, loan officer, go get this for me,
Got it.
right? But really, the processor should reach out to the borrower. Hey, congratulations, borrower. Like
Yeah, yeah,
she's going to get an email.
yeah.
Hey, congratulations. And it'll go to you and it'll go to her attorney.
So we've got 2 touches with the processor.
There's you hope for that.
Okay.
But then what you have happening is, right, now the client will send stuff back, and then there's some more stuff back, and then there's some more stuff back, and then right, they keep sending stuff, and then the processor's got to package it up, and when the processor feels that there's enough to send it back to underwriting for a review, hopefully it's clear to close. That's what we're looking for. But sometimes it's like there's a lot of stuff on a file, right?
Okay.
So the processor wants to get an update on the file.
Got it. So you said back to underwriting.
Yes.
And that's back to is coming from who?
Process. It's always
So it sounds
it's
like
always processor underwriter,
So-
underwriter,
so
back and
we-
forth, back and forth, back and forth.
So we've got you as the loan originator, that you send the package to the processor, right?
Correct.
So the processor sends it to the underwriter, right?
Correct.
Now, if there's any issues, the underwriter sends it back to the processor, right?
Correct.
Conditions.
It's the underwriter's job is only to review.
Got it.
They're not asking for stuff. I mean, they review and say to the processor, "Get me this," and they're not picking up the phone to talk to anybody.
Right.
Typically, they here's what I need, go get it. Here's what I need, go get it. Here's what go get it. And the processor's job is to work with the borrowers and the loan officer and loan officer assistant to get the stuff from the borrower that they need.
Okay, I understand.
And then when they get the stuff from the borrower, package it up and go back to the underwriter for a review. Again, what you're hoping for is two-touch, right? You don't, in fact, underwriters can get pissed off if you keep going back and forth on the same loan.
Got it.
You sent this to me 6 times. You know,
Okay.
do your
That's
job.
why it takes 2 months.
I understand.
from the closing.
Yeah.
Yes,
There's no
things are
process.
missing, then
Yeah.
if it takes too long, then you're gonna need updated bank statements, updated pay
Mhm.
stubs.
Mhm.
If it starts getting longer than 2 months.
Okay.
That's why it's so important to have a good loan officer
Yeah.
and good processor,
Good
because
processor.
when they get the file and they say, "Hey, I need this, they
Yeah.
will complete it exactly. Because if they don't, and you send it in and it's not complete, they will kick it back, and now you have to go in the
Right.
back of the line to wait again."
Right.
That's why cash
But
is
it's
faster.
Yeah.
Now, the other thing is when you get conditions from borrowers,
Right.
let's say they send in a bank statement.
Right.
Let's say they send in, whatever. They send some document in. That thing could create more conditions, right? So if someone sends me a bank statement that has all these large deposits, right? All these and has payments to people,
Yeah.
the same payments month
Yeah.
after month. Now I got to ask I have to be smart enough and conscientious enough to say, hey, you make a payment to Monica every month for $100. What is that? Is that a loan? Oh, no. We share in the cable bill. So, I pay her my half of the cable bill. Okay, fine. But it's not a loan. No, it's not a loan. Because if it's a loan, then I got to know about it because you got to document it and I got to hit it in your debt to income ratio.
Got
I
it.
got to put it in your ratio. Oh,
Okay.
what are all these large deposits? Oh, I get cash. You get cash. Where'd the cash come from? Oh, it was a wedding gift. It was a wedding gift. Did you recently get married? Yes, I did. When did you get married? I got married last month. Do you have a marriage certificate? Can you show me proof that you got married so I could show it to the underwriter to prove that you were married and you got cash gifts,
Mhm.
right?
Is there-
So you got to back all this stuff up.
Is there ever a time it goes loan officer, processor, underwriting, close? Is there
Yeah, actually, Max
One-
just
one
said.
day- one day closing.
When
Right.
everything is
Yeah.
perfect.
Right.
Yeah.
Right. Okay.
But you have to, it's the loan officer, and I'll put it on the realtor too, because the realtor also has control over the client. So it's between the loan officer's assistant, the realtor, and the client to get all that stuff up front. The more you guys are advocates for the loan officer,
Yeah.
right? Get your client to send those, and I know Josh, we beat, right? You help, get that stuff, you gotta push that.
Yeah, we had a crazy one.
No, but I'm saying
Oh, yeah.
you help,
Yeah, of
you guys, all you guys do that, but push and get that link out to people, get them to do that stuff because you don't want to be behind the 8 ball when the contract comes, or we don't want to be, because then you're going to get upset. Hey, how come it's not moving? Well, I didn't get all the docs up front, so now I'm playing catch up and so on and so forth.
Okay.
So, yeah.
Right. Yeah. I think I understand the order.
It was good. I mean,
Yeah.
it's 6:20 I think we're running out of time.
620. We're good. I think we covered
But,
good
yeah,
stuff.
It was so
Right,
good.
yeah.
Thank you, brother.
Thanks, bro.
My pleasure. My pleasure.
Good stuff.
My pleasure.
Peace out, guys. If you like it, of course, don't forget to share, like, and give us some thumbs up.
Good job.
Peace out. Thanks.